Hello, everyone, and welcome to the HUBB U.S. market update. It's a day early this week with US markets being closed tomorrow for Good Friday. We welcome to the show Rob Roy, the Chief Market Strategist at Elliott Wave Options. Welcome back, Rob.
Thanks, Dux. Thanks for having me. How you doing today?
Fantastic. We're going into a long weekend. How could I not be happy?
I hear you. You feeling better? No,
I feel a lot better this
week.
A lot better. Thank you. Now,
Good.
Rob uses HUBB software, and that is the charting software you're going to see during his analysis. And you can check that out at hubb.com. Make sure you check that one. All right, another calmer week for markets this week. But is there trouble around the corner? Jamie Dimon talking about increased rate of or chances of recession. And also you got the IMF talking about recession as well. But let's wait to see what Rob has to say about that in the show. Again, usually every Friday at 5 p.m. Eastern Standard Time, Rob is going to break down the US markets for you, including looking at major indices like the Dow, NASDAQ, Qs, IWM, VIX, the dollar. And today's stocks of interest is going to be looking at things like Google, AI, Apple, Baba, Tesla, and Microsoft, I should say. And I'm also hoping you can talk a little bit about Bitcoin too. Don't forget to get those questions in early, and I already see some popping in there, so thank you very much. We all had some great questions the last couple of weeks, so keep those coming along. Before we get started, also don't forget to click on that subscribe button and like button below. The numbers are growing every single week, so we love seeing you all on the show. All right, Rob, let's jump into it. Let's go through the US market summary for us.
Hey, everybody. Welcome to the US market update live. We are live, I like to say, to take advantage of the UFC intro. So taking a look at the market today, going in front of a holiday weekend, markets closed tomorrow for Good Friday. You can see that we did finish to the upside. That's always an important thing because traders look to square positions moving into a weekend, especially a holiday weekend. So the fact that they weren't really concerned about being long and moving to the downside to close positions out long, the fact they held them is a positive. So if we take a look at the moving averages, you can see that we are still above the 10, 30, and 50-day moving averages. Nice break of the 1030. That's a positive cross. A lot of floor traders look at that. So that looks pretty impressive and constructive. And then if we go back and look at the setup for the zigzag pattern that we've been talking about for quite some time, you'll be able to see that we are still in lines for a potential move higher. I'll change and use the different. Clicked on the wrong tool there. My apologies. So here we look at this zigzag pattern. And the interesting thing is now there's two of them. So we have this pattern here. And then if we go back and look at the previous pattern, it's always good when you have multiple patterns showing you roughly the same price. So what this is showing you is the original zigzag that was showing us 100% extension around 434. We now have, we know, a complex C wave, which is giving us the extension at 61.8%. So it's right at a 44%, just past that 38.2% fib retracement level. And that's what you expect when you have a 38.2% fib retracement, a 61.8% level as far as your extension. Going back to the B wave, there you can see was 55. So when you get over 50%, you are looking for 100%. But note that when we're looking at those two levels between the two, how close they are together. So we have a lot of information that there's likely or likelihood that we will continue to the upside. So all in all, pretty constructive week. We did finish down for the week if you wanted to be technical about it, but not much. And then movement to the upside, I think, is constructive. We look at interest rates here. This is the only little concern that I have right now is the fact that we broke below that 34 level, which we know is a level I've talked about for a while. It's okay breaking below that with rates going down. I just don't want to see rates go vertically down, and they kind of are. And the reason for that is if we start to break this significantly and we go back and look over here, from the August lows on rates, that rally was pretty significant to the upside. And then you come over here, and if there's a significant break, there's a chance that we could have a bit of a vacuum move, a pretty vertical move lower. And you might be thinking, well, isn't that good for tech stocks? It is. Isn't that good for the market in general? Maybe. And the reason that I say maybe is the fact that if we move down too fast in rates, that means a lot of money is moving into the bond market, prices and yields moving in inverse directions. And so if yields are moving down significantly, that means prices are moving up. And that's more than just, okay, the Federal Reserve is maybe done raising rates, and the fact that rates are dropping along those lines. It could mean that, hey, people are really worried about the second quarter, a significant recession, et cetera, and money is pouring into the bond market. If money pours into the bond market, then it's probably coming from the equities market to get there, and that's not a positive. Looking at the dollar, this is super constructive in my opinion. This is what you want to see the bonds do. I'd love to see bonds just kind of trickle down like this, like the dollar's doing. And we still have that wave 5 down around 97. I've been on the record numerous times in these recordings talking about as long as the dollar stays above 96, I think that's very constructive. So this, I think, is a great chart as far as the dollar moving down. I just would like to see interest rates follow along that level. We take a look at the VIX before we look at the other markets. Another area of potential concern here is we are down at the bottom here, or at least where the bottom has been recently. Can the VIX go below 18? Yeah, I mean, it's been down to 15, it's been down to 12. We even broke 10 at one time, but we've been pretty volatile lately. So the fact that we're coming down to an area that's been support recently, that just gives enough caution to stay, just be cautious and be constructive. Don't get greedy. It's not an all-in signal. This isn't load the boat, as we used to say, as far as to the long side. I think cautiously optimistic would be the term that I would utilize along those lines. So taking a look at the other big indices, the DIA as a representation of the Dow, as you can see here, no 5-wave pattern, nice movement to the upside here, little bit of a consolidation there. This is one of my favorite patterns for a breakout, when you have this vertical move here and then you have a little symmetrical triangle, and that is the operative word here, little. It's a small triangle, but Elliott himself always said, don't discount the small triangles, they work as well. So we're likely going to have some sort of a small breakout here on the Dow. No way to know which direction it will be, but likely some little move one way or the other here. But when you have this vertical move with a symmetrical triangle, it high probability that we're going to have a little bit of a move. So perhaps it's just enough to bring us up here to the resistance area at 340, or it could also be just enough to break us down and we come right back down to 330. So that's about all there is there. So I don't think there's anything too exciting on the horizon for the Dow. A small bit of a breakout one way or the other, but not a major move above resistance or below support. Taking a look at the Qs, this is where you would think, okay, the fact that rates are moving lower, the dollar's moving lower, this has to be bullish for those. And I think it has been. We look at the moving averages. We touched the 10-day moving average on the low yesterday, closed above it today, traded a little below it for a short period of time, but we're in the process of moving up to this tap box, time and price projection, with the software, the best Elliott Wave software that I know to exist. Profit source, find out more about it at HUBB.com. I've tried all the Elliott Wave softwares that I know exist. I don't like to say I've tried them all, because perhaps there's some out there that I'm not aware of, but of all the ones that I am aware of, this is by far the best. And I also like the fact that it's programmed directly from the algorithm that Ralph Nelson Elliott wrote. There's a lot of software programs regarding Elliott Wave that are personal adaptations of the algorithm. And if you don't know what their adaptations are, then you may have some trouble reading it. But looking at the Qs here, back to the Qs, getting above this area here at 310 is key. Look at where the lows were the past 2 days, right where the top of that wave 3 was. So I think that's constructive, and being above the 10-day moving average. So I think that all looks good. If we want to find some sort of okay, this is not all in, as I talked about on the long side, this is where we look at the small caps, the IWM, and we have this support area right here at 170, and we're hovering above it. That's a good thing, but you can see the IWM is not really participating much to the upside here. Our resistance area is way up at 190. So the fact that, we're having some upward movements in spots, bit of a stock pickers market, I think, right now. But the fact that the small caps aren't participating means that the general view is not, hey, it's risk on, let's go. There's still some concern out there, and that's evident, I think, by the IWM. If we can see that turn, look like perhaps we were breaking out and heading back up to 190, and all we did was turn and come back down. So again, positive is we're above 170. The negative is it really isn't moving to the upside. So caution, stock pickers market, but cautiously optimistic, I think, is the theme of the week.
Thanks for that, Rob. And once again, reminding everyone to get those questions in. There's been quite a few come in so far, so thanks for that. Rob, I didn't get a chance to dig into the job data this week thoroughly, shaking off still the sickness and so forth. But back in January, you did a video on the EWO channel suggesting that the bottom was in place for the S&P. Now, this is more of a two-part question for you from me. How do you think these job numbers impacted the market? And do you think that they have changed the Fed's way of thinking going ahead?
That's a great question, Dux. And yeah, the jobs information that came out, we had the JOLTS report, which is job openings. And it's the first time it's dropped below 10 million in 2 years, which sounds like a lot of openings, right? 10 million job openings, but it's the first time it's been below 10 million in 2 years. So that's a number that you would say, okay, is that showing that the jobs market is cooling off? And then we also had today the jobless claims number that came out. So JOLTS was yesterday, jobless claims was today, and the jobless claims number was higher than expected. So when you put those two things together, your question is a good one. Does that mean that the Federal Reserve is starting to win this mandate that they have, where they've been very adamant on they want to cool the jobs market off? They're like, we want to do that. And so based on this, it would seem like they're winning there. So the question that comes from that, in my opinion, is, all right, does that mean they're going to raise one more time? Are they not going to raise? Australia made news this week on the fact that they're going to pause. Canada had already said they're going to pause. So those two central banks have said, we're going to not raise rates anymore. We still have 25 basis points priced into our Fed fund futures that the Fed may go one more time. But what does this? How does this affect it? And the comment that you made, yeah, I think it was back on January 13th, I believe, we posted a video on the EWO channel saying, is the bottom in? And suggesting that the bottom was in based on what's known as the small business optimism chart. And it was at a low that, at least historically, every time the optimism, so this is a contrarian thing, every time the optimism had reached such a low level, the market rallied following that. So we showed that back in January, and since then it seems like that's been pretty good. Here's the chart of the S&P, and you go back and say, okay, we looked at this in January, and we've got these higher lows. We're up testing this area around 410. So again, that's a contrarian indicator. And the small business optimism, saying the pessimism is high, is what it amounts to. So, I think that with that, with the jobs data, et cetera, there is enough negativity out there. It's likely that we're going to show some sort of a recession once the Q2 GDP numbers come in, but how significant is it going to be? That'll tell us a lot. But, the market climbs a wall of worry. And even though there's positives here and there that we've been highlighting, Dux, I still think there's enough of a wall of worry that perhaps we can move higher from here.
Yeah. All right. Maybe I should go check out that video as well. That's on the EWO channel, right?
Correct.
All right, great. All right, before we jump into the stocks of interest for you, don't forget to click on that like button below and the subscribe button. Come on, you can do it. It's very easy to do. All right, let's move on to those stocks of interest. And Rob, I was watching TradeFinder on Tuesday night, like everyone should be, and you mentioned Google. How did that play out over the last couple of days?
Wow, I'm glad you were watching it, and that actually worked out extremely well, and you're correct. Google was the case study consideration that we do, and we do that every Tuesday night at TradeFinder. We talk about the markets, we look for case study considerations, and we do a live Q&A at the end, and Google was our case study consideration, as you mentioned, and you can see what happened with Google today. We did actually send that out as an alert to our alert subscribers at ewotrader.com. With TradeFinder, we look for case study considerations, and then you're kind of on your own. What do you want to go from there? At ewotrader.com, our alert service is we send out alerts on entries, any adjustments and exits. So we kind of take you by the hand and lead you from beginning to end on the trade. But as far as this one, regardless, if you follow this one yesterday, you had a really good day today. And we actually took that trade back off today for a 35 to 40% gain, depending on where you were when you got the exit. It was 35% was our fill. But it kept running after that. So by the time the subscribers got around to getting it filled, they probably did better than we did. But there you can see the big move to the upside there today on Google. So that was a great one for TradeFinder. And our record is pretty good on case study considerations that we find on TradeFinder. So every Tuesday night, 9 p.m. Eastern time, it's free to register. And look at the link here in the video, or go to our website, ewotrader.com, and register. Love to have you. It's a lot of fun. I'm glad to hear that you were watching, Dux.
Oh, I enjoyed it a lot. It was a good show. We'll check it out again this Tuesday too. Now, your other stocks of interest that you've got, I've noticed that they're the most watched and talked about stocks on Twitter this week.
That's correct. Yeah. So all the ones, the stocks of interest are the most talked about stocks on Twitter. So everybody, or not everybody, but a lot of people are talking about these. So I thought, hey, let's go through them and take a look at them.
All right. Well, this one's moved around a lot this week. AI.
Yeah, and that ties into really what the news was on Google. If you're wondering, well, why did Google jump up so much? Well, they came out and they were talking about their AI and their investment in it, and it's going well. And we know that there was some news that came out with the new AI stuff within Google before, but there was more news today. And so that was part of what created this big move to the upside, likely what created the interest on Twitter with the symbol AI, and you can see it's C3 AI. And people ask about this because look how volatile this is, Dux. The thing moves like crazy, up and down, up and down. And you've heard me say this numerous times. Anybody that's viewed us before knows that I always get concerned when we have these vertical moves. What goes vertically up often comes vertically back down. I mean, look at this stock as a perfect example. Vertical move up, right back down. Vertical move up, right back down. And then we had it again, vertical move up with a doji, came right back down, but a nice bounce back today. And I think that's kind of why there was so much interest in this stock on Twitter. They're wondering, is there going to be another one of these big runs back to the upside? Well, we had a nice bounce today. The key here, and these kind of stocks are so wild, they're not kind of my cup of tea with the this kind of volatility movement. If you get it right, obviously it's great. But if you get it wrong, if you're on the wrong side of this, it's not too much fun. But as far as analyzing the stock chart, there's tremendous support here at 20. It held, it bounced to the upside here. So I think if you're looking for something and you have a high risk tolerance and you're looking for something from a bit of a speculative standpoint, you could take a shot and say, hey, maybe we run back up to 30 or plus again on this. The stop is easy. You can see where 20 was the support level. If it breaks below 20, you get out. But the bounce back today got it above the 50-day moving average. So I can see why people were talking about it on Twitter. So this is one, be careful and make sure that if you're going to play in this area, it's your high risk money is the way I would view this. But interesting that I think the movement today piggybacked off of what was going on with Google's AI chatter that they had today.
Yeah, listen, AI has been a hot topic for a long time, but it's definitely picked up over the last week, that's for sure.
Absolutely.
All right, let's move on to Apple then. That's another hot one.
Yeah, everybody was talking about Apple today. I'm not really sure why. There wasn't anything too significant, but it was right up on the list of the stocks people are looking at. And of course, stocks, we know that everybody always is interested in Apple. So maybe that's all it was just the norm, but sometimes it's on that list, sometimes it's not. We have a nice zigzag pattern here within the 5-wave impulse pattern. Again, when you see multiple Elliott wave patterns, it's something to pay attention to. Now, note that the wave 4 at 30, right at 40%, excuse me, is right at the 38.2% fib level, and that leads you to a 61.8% extension, which is exactly where we are. And we've had a little bit of sideways move here. That's constructive. And then the question becomes, from here, what is the likelihood that we move from here and go up to an extended C wave up at the 100% level? I like to look at one of our favorite confirming indicators, which is the DMI, to see what's the likelihood that you move from where the C wave was supposed to go. So let's be clear, it's done what it was supposed to do. Now we want to know, will it be an extended C wave? Because the 61.8% was the target, and the DMI still looks pretty strong. You don't want to see that positive directional indicator move below the ADX. There's still some separation here, so perhaps it was a little bit of caution into the weekend. But the fact that we finished to the upside today on Apple, but the positive directional indicator went lower, I think you want to be a little cautious there. But the chart in general looks pretty decent, and once again, the support area is pretty easy to see right in here in this 160 area. So I think as long as Apple stays above 160, you can take a long position here and see if we do get that 100% extension.
Okay. Now, one of the most active ADRs in the market the last couple of weeks is Baba, on the back of their news breaking up into 6 different companies. Obviously, another very active name on Twitter. What does it look like?
Yeah, you're spot on there, Dux, and that's exactly what the creation of this value has been, is the fact that they are going to split into multiple companies, and then that leads us to, there was so much chatter, right, on the world in China. Does that mean that the Chinese government is finally going to back off because they've been creating so much regulation for their big companies, their top companies, and it was hard to understand why would they do that. So perhaps the fact that Alibaba feels comfortable enough to split and move into different companies means that they feel that perhaps there's going to be less regulation moving forward. The key here, there was that big move that occurred on the commentary that you were talking about, Dux, here, where we had this big break to the upside here on the news. And the key to me is that we've held above 100. So we got above 100. It's come back, tested it numerous times. We're still above the 10-day moving average. I like this one. You just always have to throw that little caveat. Keep that in the back of your mind of at any time, the Chinese government could come out and say something more from a regulatory standpoint. But if they will back off and leave things alone, I think you could get a nice bounce and run out of Alibaba. I can understand why there's interest in this, especially with the news that came out. So, I mean, look at this potential move. That's a pretty big move forecast there from 100 to 140. And if the government in China stays off, I think this has a high likelihood of occurring. And then you have the fundamentals of the fact that China is coming out of their lockdown, and their economy is likely going to reaccelerate, et cetera. I think this one looks good. Your stop is 100, though. Once again, as long as it stays above 100, you can be long. If it breaks back below 100, I think you close the position out and wait and see.
Okay, it can't be a show without Tesla on the charts. Now, there's going to be some volatility coming up in this one. There's a big announcement coming out of Detroit on Wednesday from the Biden administration. So let's have a look at this ahead of that.
Yeah, you are 100% right. I mean, we get this, and it's amazing. It's always in the Twitterverse of the most talked about stocks. And if we don't cover it, people ask about it anyway. So we might as well just put it in there because it was in that list. So I stay with where I've been over the past couple of weeks here on Tesla, and the fact that it's holding this 180 level with the news coming up this week that you referenced, Dux, I think is a positive. But my view on Tesla remains the same. If it breaks below 180, I think it's a short. And I think we're probably going to come down and test these lows down here from early January down around 110. But it has to break 180 with follow through. If it doesn't do that, then we have the chance of it bouncing up to 220. And could this news perhaps be viewed as a positive enough to break the stock above 220? Because I think if it breaks above 220, it's a long. So right now for me with Tesla, and I know nobody wants to hear this because everybody wants to know where's Tesla going. But if I'm being as honest as I can be, which I always try to be, I think it's the trading range here between 180 and 220 is a no-go zone. You watch and see. So just to summarize again, a break below 180 with follow through. I think we're probably shorting back down to 110 or so. But if we can break above 220 with follow through, then geez, we could run back up and try those highs again at 310. I just think you have to wait right now. And I know patience regarding Tesla is not what people want to hear. Unfortunately, though, that's how I view it.
Patience is a virtue, Rob.
Yeah, very good.
All right. Let's have a look at Microsoft. I think you talked about that on Tuesday as well, right? It was in one of your names.
Did. Good old Mr. Softy. Yeah, you're right. It was actually on our list of case study considerations that we took a look at. You were watching. You're not kidding. So yeah, looking here, we had a nice move today to the upside on Microsoft. Hit the 10-day moving average on the low, and you can see what a nice rally that was. And the key here, Dux, on Microsoft is now we're right at this level. And we broke above it today, just barely, but right above that area from the August highs. And is that going to act as resistance? Now, the fact that we hit the 10-day moving average on the low means we're not really that overbought. I don't like it when stocks break resistance levels, major moving averages, break out of a triangle, et cetera, when you're already overbought or oversold if it's the other direction, because those moves tend not to hold. But we're not. And we tested the 10-day moving average yesterday. Tested it again today, and it looks like perhaps we can move to the upside here. Now with the wave 4 at the 61.8% level, the wave 5 is at 100%. That's your first level. So as we were talking about with the zigzag, you want to see what does your confirming indicators tell you about the potential for an extension. In other words, can the wave 5 extend past the 100% level, which is the target it's supposed to go to. So we're at the wave 5 target. We're kind of breaking above those recent highs, and you look at the DMI, and that's about as supportive as it gets. You can see here's what you want, that positive directional indicator moving up on an up day, the negative moving down, buyers firmly in control here. The ADX is showing you that's a strong move. For those that aren't familiar with the DMI, when the ADX is moving up, that doesn't tell you the stock's moving up. The ADX gives you the strength of the move. So the fact that it's an upward move and the ADX is moving up is telling you, yeah, there's strength behind that. So it looks like Microsoft wants to go higher, Dux.
Okay. Now, do me a favor, will you, Rob? Can you have a look at Bitcoin for me?
Sure. That's another one that everybody wants to look at. And I just feel like the question that comes up so often is, does Elliott Wave work with Bitcoin? And the chart here, we've talked about this the last couple of weeks as well, Dux, but you know, it's just been so spot on. 61.8% wave forward correction, 100% extension. It doesn't get any more classic Elliott Wave Fibonacci than that. I mean, that is exactly what's supposed to happen. And the concern that I've had is the vertical nature of this wave 5 move. I would have much preferred a more 45-degree angle move to the vertical move. But since then, we've gone dead sideways and consolidated. And if you're looking for the best way to consolidate a vertical move, that's it. So dead sideways here, right, bouncing back and forth in this tap box. I mean, man, the software nailed this one so well. So, you know, you have the range here is what the tap box means, time and price projection. And since Bitcoin made that strong move, it's been staying there. Pretty impressive. And we have that having, you know, people make fun of me on YouTube all the time for not pronouncing that right, but Bitcoin is going to go through that process in the first quarter of next year. And historically, moving into that, about 9 months to a year before that is when Bitcoin has taken off in the past, and it's worked every time. So is that the beginning of this move? I think you just want to be tiny bit cautious because it's still a vertical move. But if you want to know the best way to consolidate a vertical move, that's what it is, what Bitcoin's doing right now. So you got to like that price history over the past couple of weeks there on Bitcoin. I know it hasn't accelerated, but the fact that it hasn't given back some of that big move from March, I think is pretty impressive.
All right. Listen, thanks for that, Rob. Let's get into the Q&A. Once again, don't forget to click on that like and subscribe. If I don't get to your questions today, I apologize, but don't forget, Tuesdays, 9 p.m. Eastern Standard Time, you can go to TradeFinder and you can listen to Rob live. Right, Rob?
Absolutely. Yeah, I'd love to have everybody.
All right. I've got a whole heap of questions here. I just want to quickly jump on to Ren asked a question about the Tesla comment I made. The Biden administration is supposed to come out with comments on Wednesday in Detroit, talking about the proposed standards on cars and light trucks. They're not talking about a complete ban or anything like that, but apparently it's going to be a real crunch down on that. So that's some of the volatility we might see in that EV space. All right, let's jump into the Q&A side of it. Japan Aggression, I love that name. He wants to look at the industrial sector, in particular, Caterpillar and Deere.
Okay, well, those two stocks in the exact same space. So you would think the charts are similar, but let's take a look. So Caterpillar, pretty vertical move over the last few days to the downside here. However, look where the wave 4 is, 61%. So we're right at that 61% wave 4 corrective move. Is that going to hold? Are we going to turn and move back to the upside here? You can see that gosh, we're this far down. We haven't quite filled that gap that occurred back in the end of October. Hard to imagine that we're going to get this close and not come down and fill that gap. So I'd be a little concerned about, going long at this point in time. We are a tiny bit oversold, and we are right at a very strong fib level. 61.8 is the strongest fib level in my opinion. So pay attention when those levels are hit. And oftentimes that's a good point to get in and enter a long position. It's still in a qualified 5-wave pattern to the upside. I just feel like it's just hard to imagine we get this close and not at least come down and fill that gap at 200. So I'd still be a little cautious there. We close at 209. So the key here is if we can hold 200 or hold where we are now and turn and move back to the upside. And for those of you that have a little more cautious tone to your trading, you would want to wait and let Caterpillar show you it can get back above 220. If it can do that, then perhaps we have something moving here and then we can continue to the upside. But until it can get above 220, I'd be very cautious on this and concerned about the possibility of coming down to 200. Now, if it doesn't hold 200, then we're probably coming down to 160. So that would be your stop there around 200. If you want to take a speculative shot at Caterpillar now, you could because of that 61.8% level. But know that 200 is your stop. It breaks below 200, you got to get out. So let's see what Deere is looking like here. And so the charts are kind of similar, both of them giving you pretty vertical moves. Now, from an industrial standpoint, that's really not what you want to see from a healthy economy, is it, Dux? But is this just money rotation? Because the Federal Reserve, whether they go another 25 basis points or pause now, is likely at the end of their rate hike cycle. And at some point, depending on how bad the GDP numbers are for second quarter, are going to likely cut rates at some point in the not too distant future. So perhaps this is just rotation. But both these charts pretty ugly on these moves. And we ought to probably throw some volume in here and show that there is volume here. So when you see that, it's likely the big boys are rotating out of these stocks for whatever the reason is. This one is in a wave 5 here, though, so we have different Elliott wave charts, which is interesting, where you had a potential qualified upward pattern on Caterpillar, but we're in a downward pattern on Deere. And so the fact that these two stocks are in the exact same sector, when you have conflicting patterns like that, for me personally, that means hands off. It's like wait until the two patterns both agree, because they will get in unison since they're in the same sector and the two stocks are so similar in what they do. We are oversold on Deere. We're kind of in no man's land here. The fact that we broke below 380 was an area that needed to hold. It didn't. So the possibility that we come down here to this 330 area, I think, is strong. So I just think for at least the time being, perhaps this is a hands off until we get some sort of congruency here between the two charts. The fact that they look completely different, that's a concern. When you see that, there's other places to trade and put your risk capital, I think.
Okay. There's one name that's come up here from a few different people. They want to look at Roku.
Roku, gosh, we haven't looked at that one in a long time. And this is, dealing with the whole, there's, Netflix has had a little bit of a bid lately, and you're wondering if we are going to go into a recession in Q2, what's the consumer going to do? How are they going to spend their money? Is it going to be a summer of staycations, is the word they like to use, where people aren't traveling as much as they normally do to save money if there's fears of a recession, et cetera. And so Roku has had a really nice consolidation here. I like the looks of this chart. I think it kind of lends into that narrative that I was just mentioning of perhaps there's not as much summer travel coming up this year as there normally has been. We are back above the 10, 30, and 50-day moving averages holding. This is a real easy trade here as far as a risk standpoint. You could be speculative and go long right now. The wave forward right at the 61% level. 60 though is your stop. You break below 60, you get out. But I think you could take a shot at going long this right now. That's really interesting to me. In fact, this brings up a question that I would love to hear for those that are viewing live and those that will be watching the recording. What are your plans for the summer as a consumer, as someone watching this? Are you paring back your plans? Is the fear of a recession changing what you're going to do as far as summer vacations at all? So I'd love to hear your comments on where you think things may go. So leave a comment on the video if you would on whether or not these recessionary fears are going to change your summer plans at all.
You mentioned Netflix there. The Catalina also wants to look at Netflix.
Oh, okay, that makes sense. So we'll add that one into the mix. And Netflix had a heck of a run, and it pulled back a bit, which that was a little too vertical on the move. So we've talked about that enough. I don't think I need to rehash my view on vertical moves. But it really held an important level here at 300, right where the wave 3 high was. We've caught a bid back to the upside. We got a hammer doji here. So moving into next week. And if you're wondering what happened here, Netflix has been super weak on sharing of login information. Most everybody probably has shared their login information with somebody, and they're just now starting to crack down on it. They said they were going to, but the fact that they had really surprisingly high new subscriber numbers without having begun that crackdown yet is what sent the stock soaring in January. So then we pull back, we fix this vertical move, we hold support, and we're bouncing back to the upside. And I think there's optimism on what the subscriber numbers could look like as they do start to crack down on the sharing of logins. But your key here is I think you have free run up to 360. There's some resistance there though. So you got kind of a 20-point window here above the 10-day moving average. I think it's highly likely that Netflix tests that 360 level. And then we have to say, okay, let's take a look and see how things go. But interesting that, kind of comes into the question on consumers' viewpoints on people asking about Roku and Netflix. I think that ties right in.
Well, Catalina is actually telling you that they're having a trading staycation all the way.
I love that. Love that.
Now, me too would like to look at Schwab, SCHW.
Oh, there we go. We've talked about this one, I think, within the last couple of weeks, Dux, on they got caught up because Schwab has a bank, right? So they got caught up in the whole banking mess, and how bad is that going to be? They had come here, they had held. I'm a bit surprised that we've continued lower here. I thought perhaps we could bounce, but you can see that you got to go back into early 2021 to see Schwab back down at these levels, and that movement there, where is the bottom going to be? This is the old proverbial trying to catch a falling knife thing here. It looked like we might hold right in this area, but it didn't. And so we're still kind of trickling down. We got a little bit oversold yesterday, so I don't think you read too much into this slight little bounce here. So that's telling you there's still concern, in my opinion, in the banking sector. I don't think this has anything to do with the trading aspect. I think trading numbers are still fine, but the concerns over the banking world, I think, are still there. And so, this is a tough one. You literally are trying to find or guess on a bottom here. So for me, Schwab I wouldn't touch it. It didn't hold an area where it could have there at 55. So that, you could have had a constructive bounce to the upside there, but it didn't do it. So I think Schwab let's let it tell us when this wave 3 to the downside is finished. So I think this is a just hands off and watch.
I'm going to guess that you've never heard of this next stock called Cadiz.
What?
Symbol is CDZI.
You're showing your Aussie nature moving through there, Ducks, with the Z. Remember the first time I went to Australia and people were talking about Z, and what? What are we talking about? And then H. I guess they don't say that as much anymore, but it used to be instead of H, it was H, and it was like, oh man. And then when the first time somebody said ta, I had no idea what that meant either. So yeah, so the symbol, you are correct. I am not familiar with this stock, but it did have a pretty impressive move today. So we had to support at 4. It broke below it, but no follow through, and immediately back above it. And this is this is a good example of why I'm always talking about you have to have follow through. There's so many head fakes that occur in the market. You build this support for months, and then you break below it and it sucks everybody in. Oh man, this is a short. We're going all the way back down to 2. That's what it would look like, right? Because there is no resistance in the way. But it didn't follow through. There was no follow through day. So immediately we get back above 4, which I think is important. So if this, it's a single dollar stock, it's below 5. This is a super aggressive stock here, very speculative. So if you have some, real play money that you're looking to do something from a speculative standpoint, the fact that we got back above 4, you could take a shot at this and see if perhaps you get some sort of a mounting run here up to where that wave 5 target is, somewhere near the 6th level. But again, your stop is pretty easy at 4. If it breaks below 4 with follow through, which it didn't have here this week, you're out. But the fact that it rebounded immediately, somebody came in and supported it. So take a shot at it.
Yeah, I saw some comments on social media about it today. You can all go check that one out. All right, let's whip through some here because we've still got plenty of stocks to go through. Will Early wants to look at Costco. This is a triangle trade going back a year.
Back a year. Wow, that'd be a big triangle. Well, let's take a look at it. They're not wrong. So let's take the moving averages off. And when there's triangles, I also take the LA wave off. That was an 80% wave 4 anyway. So that means it was disqualified. So it is in a corrective pattern, and a huge one, as the viewer has described. You can see there's the big massive triangle that it's in. Now it's a $500 stock. So when you see a big, huge triangle like this, it's not quite as significant of a movement as it might be if it was a $50 to $100 stock, but still that's a big mouth of the triangle. It's over 100 points. So it does look like Costco is going to start to break out here. Now the key is, and I was watching this today, it's on my list every day on my watch list. So the breakdown today, breaking out of that lower trend line, makes you wonder, is that the breakout? So as we just got done talking about, you have to have follow through. It could be a head fake. Perhaps, it's just coming down and finding a little bit of support there at 480. But if we get follow through to the downside to start next week on Costco and perhaps break these lows, I think that's what I would be looking at to feel comfortable that it is a downside breakout. I'd want to see this low here of the 13th of March broken. But that wasn't a very good day today when, stocks like Google and some other ones had good days. So we're trying to find where the market rotation is. So that's pretty interesting, but you've got plenty of time to wait. It's hard to put, we like to put strangles on triangles, but difficult to do on a $500 stock because it's just too expensive. Better off to wait, let it show you what the direction of the breakout is. But again, I would encourage people that maybe bullish or long Costco, don't get too concerned about today's move. It has to have follow through. But if it does follow through, breaks that low from today and closes lower than that beginning of next week, then perhaps Costco is looking to head lower. But if we're going to go into a recession, Dux, wouldn't you think that, hey, maybe this is a stock that would do well, that people are going to tighten the belts and this is a kind of place along Walmart, et cetera, on where they may want to shop. That's why I say don't be too concerned about today's move. Let's see if it gets any follow through or if it turns and bounces back up, if this was just a head fake or whatever. But I agree with whoever wrote in. This is a big triangle and likely Costco is going to move around 100 points, but we don't know what direction.
Thanks, Will. All right. Now we're going a little over time, but let's do like some power ones. Let's just whip through some. How about NEO? I think we looked at this last week or the week before.
Yeah, and I'm not a good one at powering through. I tend to chatter too much, but NEO, I think China is going into a little bit of protectionism. Tesla's having some issues over there. The fact that we had gotten above 10 here, I thought was really key, but we broke back below it. Now we need to hold this level at 9. If it doesn't hold 9, which is where it is with a doji today, so you would think perhaps we're going to hold here. The last bastion of support there is a little bit at 8, but just short term. You really want to see it back above 10 rather quickly. I think this could be scaring some of the weak hands out, in my opinion, but it is in a 5-wave to the downside pattern, which would suggest a break of 8. I want to see that first. But if we could mount some sort of a move, when you look at how vertical this move was to the downside, at some point, it's going to recover that. Now, whether that's sooner rather than later, we'll have to wait and see. But I feel like if you want to put some money away longer term in a stock, especially with China coming out of their lockdown, I think this is a place to be, even if there's a little more weakness in the short term.
Okay. Few questions coming through for NVIDIA. Even Brendan in the background, he's asking about it as well.
Yeah, this is like Tesla, right? We can't do an event without NVIDIA. Everybody wants to know this, and been just such an impressive run. And it is encouraging that this correction or this consolidation, more like it, has gone sideways. We broke here above 240. We were able to take a quick bullish trade out of this for our alert subscribers at Evo Trader. And then we got out and it looked like, well, gee, maybe we got out way too early, but now we've backed off. So the exit looks pretty good from there. So this consolidation here, I think, is pretty warranted. And I think you can stay long NVIDIA as long as it stays above 240. A break at 240, you have to reevaluate. But as long as that holds, I think you can be long NVIDIA still.
Brent's asking about DoorDash.
Is it Dash?
Dash, yeah.
Yeah. On DoorDash. And I don't know about you, Dux, but I'm contributor to DoorDash. Use them a lot. Use them. I mean, after the whole COVID thing, I got really used to people just leaving food at the door and not having to go fight crowds and worry about all that stuff. I'm a big user of them. I use them every single week. So I'm interested to look at the stock. I actually haven't looked at the stock in a while, but another really easy one here. Holding above 60 is key. The negative is it's below the 10-day moving average, but I think you can be long as it stays above 60. It's above the 50-day moving average, which is tapped on the low. A break below 60, I think perhaps you sit back and wait, but a speculative long would be as long as it stays above 60. Harry
Toe wants to know about UNG.
Natural gas, gosh. there's so much chatter on the financial networks too about how low can this stock go. At some point, is it going to zero? I mean, is this going to be one of those? I think you brought this up, Dux, when we went back during COVID, where oil actually went negative, where you could get paid to accept a barrel of oil. So everybody clean out your garage and then take some oil, get paid to do so. Is that going to happen? No, I'm just being facetious here. But this break to the downside today was shocking to me, really, to see that. So I don't know how low it goes. It's already 122% extension to the downside. And the weather has been so warm across the country, but at some point we're going to start to get into summer usage, and maybe that creates a bid. It looked like it was trying to find some consolidation there at 7, and it broke it today. So this is another one of trying to find the bottom, but I do think that again, if you're looking like Neo for something to put money away for the longer term, you're not looking for a quick trade, but something longer term, this would be a place to be, because natural gas is way down there. At some point, it's going to bounce back.
Okay. Will's looking at AMD as well.
Well, we haven't got, there was a time, Dux, when AMD came up every single week. Somebody would ask about it, and it became a joke, and then nobody talks about it lately. So interesting to have it come back up, but really nice looking chart. Resistance at 90, came back, consolidated above 80. So this is a really constructive chart, in my opinion. And we got back above 90. We're above the 30-day moving average, which I look more for the 1030 crosses rather than a point of major support resistance. We're above the 50. So holding at 90, I think, is key. So another one where if you wanted to go long here, 90 is your stop. If it breaks 90, you're probably going to 80, so you'd want to get out. But as long as it holds here, another hammer doji. So suggestion of perhaps some upward movement to start the beginning of the week.
All right, we've got 2 to wrap up the show for today before we get to our long weekend. It's from Hasta La Vista Barbie. I just love that name. But we want to look at gold, GOLD.
Oh yeah, I actually wanted to look at that. So I'm glad that Hasta La Vista brought that up. So you can see that we ran right to this wave 5 high, but we were overbought, right? You can see the separation from the 10-day moving average. One of my rules, no security in any time frame gets very far away from the 10-day moving average. So that separation was there, but we're coming back down. And I think that I've been looking for, we did a quick alert on SLV and got out of that one on this big move. Same thing here with GLD. If we can hold 185, coming back down to test 185, if that holds, I'm interested in going long GLD, especially with the chart of the dollar looking like it's not done going lower. That should be supportive of the metals moving higher. So I like both of those. We just got a little overbought there in this wave 5. But is that the end of it? That's the question. Is that the end of the move? It's done what it's supposed to do. So we look at our confirming indicators to give us an idea of how strong the move is for an extension. And that looks pretty good. So the fact that it's come down, that's a positive directional indicator. Moving lower on a move down is not concerning. You don't want to see the positive directional indicator coming down when you're having a move up. So if we can hold 185, and then even I would submit that if it doesn't hold 185, 180 could be an area. But if it were to break that, then I would change my whole thesis. But I'm personally looking for a test of 185 to try to go long there on GLD.
Well, you can't talk about gold and not talk about silver. Come on, bring the chart up on that one.
You are correct. So, I used to always talk about SLV was the little brother to GLD. It seems like it's the other way around now, with the fact that so much silver is used in electronics, etc. So SLV seems to, for whatever reason, be the leader. And this is the move that we missed here, this vertical move. So we caught that move, but then when we got to this resistance here at 22, it's like, all right, we're probably going to bump our heads here for a while. And it did for 2 days, because this was the day that we got out here on the 30th. And so 2 days we looked like geniuses, and then boom, we had that big move. So I think this one, I'm kind of in the same boat with GLD here. It's a little bit overbought. I want to see it come back down and test 22. If it does, then I'll feel vindicated, and that would be a great entry. So I would just like to see, it's holding at 23 right now, but I would like to see a test down to 22. And I think that's a great entry on SLV for a move up above 24.
All right. And the very last one to look at for this week is Blackstone, BX. Obviously in the press again this week about not taking redemptions from one of their funds.
Yeah. And in that, I mean, I know they were heavy into
Commercial real estate.
Yeah. And also, you know, with Sam Bankman-Fried, SBF, they were kind of investing with him as well. So they had some negative press. So I can imagine with all that, there's people maybe wanting to take some funds out, and you know, that's never a positive thing when they're saying no. But this has got a significant triangle here, almost as good as the but not quite as the Costco one. And I say that because you have this run from the low to the high here, but there's a void here. Pretty good set of lower highs, some gap here on the higher lows. So it's not the greatest triangle I've ever seen, but nonetheless, we have a pretty large triangle here. So Blackstone looks like it's going to make a pretty significant move. Which direction is it going to be? It's going to be very interesting to see. So this is on my watch list to see what happens here on whether, I mean, if that breaks to the downside, holy cow, that's the Katie bar the door, Ducks. That's where that expression comes in. But if it breaks to the upside, then it'd be like, okay, all's forgiven. But something significant is getting ready to happen to that stock.
Katie by the door. Like I actually wrote down the one you said before, like back up the boat or load up the boat.
The boat.
Isn't it
Yeah.
back up the truck?
Well, some people say back up the truck. Load the boat was the expression in my day. So I guess I'm telling my age there, but that's what we used to say. Load the boat.
Listen, thank you so much, Rob. Look, don't forget, everyone, we're back every Friday except for tomorrow's Friday, 5 p.m. Eastern Standard Time. Get your questions ready, your review of the week. We're here for you to help you through all of that. Rob, have a great long weekend.
Thanks. You too, Ducks. I appreciate it. Enjoy your holiday weekend. And everybody else, enjoy as well.
Oh, yeah. And everyone else out there, enjoy your weekend too.
Take care, everybody.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.